3 days from now, one company will attempt to raise more money than any business in human history. Here's everything you need to know. What's up everyone, welcome back to the channel. If you're new here, we break down the biggest stories in tech and finance in a way that actually makes sense. And today, we've got a big one. Like historically big. We're talking about SpaceX going public, and why this single event could reshape how we think about investing, space, and the future of trillion-dollar companies. So grab a coffee, get comfortable, and let's get into it. Alright guys, what I'm about to tell you is genuinely one of the biggest financial events in modern history. And it's happening in just 5 days. SpaceX, yes, Elon Musk's rocket company, is going public. On June 12, 2026, it hits Nasdaq. And this is not your average IPO. This could literally be the largest public offering in the history of financial markets. Let me put the numbers into perspective for you. SpaceX is aiming to raise $75 billion from this IPO. The previous world record? Saudi Aramco back in 2019, they raised about $29 billion. SpaceX is looking to nearly double that record. Let that sink in for a second. The share price has been set at $135 per share. And the total valuation we're talking about here? Up to $1.75 trillion. That puts SpaceX ahead of Tesla in terms of market value. Wild, right? Now let's talk about what this company actually does, because SpaceX is way more than just a rocket company at this point. There are currently 10,000 Starlink satellites in orbit. The company pulled in $18.7 billion in revenue in 2025 alone. We're talking rocket launches, satellite internet, space tourism, and they're even planning to build data centers in space. Like actual data centers. In orbit. Around Earth. Here's something interesting though. This IPO is being designed with everyday investors in mind. SpaceX's CFO Brett Johnson specifically said that retail investors will play a critical role in this offering. There's even talk of a 1-for-5 stock split to make shares more accessible to regular people. So this isn't just for Wall Street suits, this one's for everyone. But, and this is important, Musk is not letting go of the wheel. Investors will receive Class A shares which give you 1 vote per share. Musk keeps his Class B shares which carry 10 votes each. Bottom line? Even after raising tens of billions of dollars from the public, Musk retains over 82% of the voting power. He's taking the money but keeping full control. Classic Musk move, honestly. And zooming out even further, SpaceX is just the beginning. OpenAI and Anthropic are both expected to go public later in 2026 or early 2027. If all three of these giants hit the market in a short window, we could be looking at a combined IPO wave exceeding $150 billion. The markets have never seen anything like this. SpaceX's 3 business segments, and why one of them is carrying the whole company. Let's talk about how SpaceX actually makes money, because most people have no idea how this business is actually structured. There are 3 segments, and honestly, the story is way more complicated than the headlines suggest. The first one is what everyone pictures when they think of SpaceX. Rockets. Falcon 9, Falcon Heavy, and of course Starship. And yes, SpaceX is absolutely dominant here. They're responsible for roughly 80% of all payload launched into Earth orbit. NASA contracts, Pentagon missions, commercial satellites, you name it. But here's the part that doesn't make the highlight reels. This segment is currently losing money. What? Because developing Starship alone has cost around $15 billion. That's a staggering R&D bill and it's dragging the numbers down hard. Now, the second segment, and this is where it gets really interesting, is Starlink. This is the one making the whole machine run. We're talking 10 million subscribers across 164 countries, over 9,600 active satellites in orbit, and a jaw-dropping 63% EBITDA margin. And get this, Starlink accounts for somewhere between 69% and 80% of SpaceX's total revenue. One segment. Carrying the majority of a trillion-dollar company. That's wild when you think about it. And then there's the third segment, the newest and most controversial one. In February 2026, SpaceX merged with Elon Musk's AI company, xAI. The move was clearly designed to pump up the valuation ahead of the IPO, and it brought some serious firepower into the mix. We're talking the Colossus supercomputer centers, over 200,000 NVIDIA chips, and the infrastructure behind the Grok AI distribution. But let's be honest here, right now this segment is a cash furnace. It's burning through money at a pace that's hard to ignore. Fire the financial reality, growth, losses, and a rapidly shrinking cash pile. Okay, so here's where we need to slow down and look at the numbers carefully, because the story SpaceX tells investors and the story the balance sheet tells are 2 very different things. On the surface, the growth is genuinely impressive. Revenue has surged more than 80% over the last 3 years, hitting $18.67 billion in 2025. That's not a small number. For context, that's a company growing faster than most of its peers in any industry, let alone aerospace. But then you look at the bottom line, and it gets uncomfortable. SpaceX posted a net loss of $4.94 billion in 2025. And if you thought that was bad, the first quarter of 2026 alone came in with a $4.28 billion net loss. In one quarter. That's not a rounding error. That's a structural problem driven by the massive spending on Starship development and the XAI integration. And perhaps the most alarming number of all, the company's cash reserves dropped from $24 billion to $15.9 billion in a single quarter. That's over $8 billion gone in 3 months. Now, to be fair, SpaceX is investing heavily for the long game, and the IPO itself will bring in fresh capital. But anyone telling you this is a straightforward profitable business right now simply isn't reading the filings. Can't buy SpaceX? Here are the stocks that ride the same wave. Here's something a lot of people don't realize. Even if you don't get access to SpaceX shares directly, or you simply don't want the risk, there are plenty of ways to position yourself around this space and AI wave. Let's break them down by category. If you want pure space exposure, look at names like Rocket Lab, RKLB, Planet Labs, PL, Redwire, RDW, Intuitive Machines, LUNR, and Black Sky, BKSY. These are the companies operating in the same ecosystem, and a rising tide in the space industry tends to lift all of them. If you're more interested in the AI and chip infrastructure side of things, the names to watch are Arista Networks, ANET, Marvel MRVL, Lumentum Light, and STMicroelectronics, STM, which actually manufactures the radio frequency chips inside Starlink terminals. And don't sleep on Google, which quietly owns a 6% stake in SpaceX already. For those who prefer the defense and space intelligence angle, think more stable, more established, you've got L3 Harris, LHX, Lockheed Martin, LMT, Northrop Grumman, NOC, RTX Corporation, RTX, and Kratos, KTOS. And finally, for the materials and advanced alloys side of the supply chain, the companies making what rockets are actually built from, keep an eye on MP Materials, MP, Allegheny Technologies, ATI, for titanium, Hexcel, HXL, and Freeport-McMoRan, FCX. So what's the right move for you? This is the question everyone's asking, and the honest answer is, it depends entirely on your risk tolerance. So let's be straightforward about it. If you're a high-risk investor who's comfortable with serious volatility, yes, you can buy SPCX directly. But keep it under 5% of your total portfolio, and mentally prepare yourself for a rough first 6 months. IPOs of this size almost always go through a turbulent shakeout period before they find their footing. If you're more of a medium-risk investor, the smarter play might be building a space basket, spreading your exposure across several of the companies we just mentioned. Alternatively, space-themed ETFs like UFO, ARKX, or ROKT give you diversified exposure without betting everything on one name. And if you're a low-risk investor? Honestly, the wisest move here is patience. Wait for the dust to settle after the IPO, review the balance sheet properly, especially that cash burn rate, and in the meantime, lean into the more defensive plays in the defense industry space. There's no shame in watching from the sidelines until the picture becomes clearer. The bottom line? SpaceX is a genuinely extraordinary company with a genuinely complex financial situation. The upside case is real. But so are the risks. Go in with your eyes open. SpaceX is a visionary and unique company. However, its $1.75 trillion valuation only prices in a scenario that leaves no room for error. I'd like to remind you that past IPOs like Facebook, Uber, or Coinbase also experienced significant declines in their first 6 months. Therefore, I advise investors not to rush into anything.